Gifts of life insurance are an important source of funds for charitable organizations. They're typically structured in one of two ways. Either the charity is the owner and the beneficiary of the policy, and the insured makes a contribution to the charity for the premium payments, or the second method is the insured remains the owner of the policy and names the charity as the beneficiary. Gifts of life insurance are an important source of funds for charitable organizations. More and more charitable organizations are having planned giving campaigns today. Many of us during our lifetimes make annual gifts to organizations like United Way, our churches, our alma maters, but when we die, those gifts stop. Charities want those gifts to continue, and so they're asking donors to endow those gifts. Life insurance is a natural vehicle to help endow annual gifts. Policies are normally structured one of two ways. Either the insured remains the owner of the policy and names the charitable organization as beneficiaries, and then the employee or the insured, of course, continues to pay the premium. The second way is from inception for the charitable organization to be the owner and beneficiary of the policy and have the insured make gifts each year to the charity, and the charity in turn pays the premium. Now those are taxed differently. If it is the situation where the individual owns the policy and simply names the charity as the beneficiary, then the premiums are not tax deductible. The individual may be entitled to a charitable estate tax deduction at the time of death. Conversely, if the organization, the charitable organization, is the owner and beneficiary of the policy from inception, then each gift of a premium payment is 100% tax deductible. Well, there are several considerations to factor in. One is how much control the donor wishes to maintain. If the donor wants maximum control during his or her lifetime, then he or she would maintain the ownership of the policy and name the beneficiary, the charitable organization, as a beneficiary. If, on the other hand, the donor desires a charitable deduction that overrides the control consideration, then by naming the charitable organization as the owner and beneficiary, the donor receives a current deduction for each premium payment made. Other considerations are what type of insurance to use. There is term insurance, or there's permanent insurance, cash value insurance. Almost always, permanent cash value insurance is used in making charitable gifts. And the purpose of that is the charity wants to know that it's going to receive some death proceeds at some point. If only term insurance is used and you outlive the term, then the charity's gotten nothing. So we would almost always recommend that permanent cash value life insurance be used when making these type of gifts. The cost of a policy depends on a number of factors: the amount of insurance to be purchased, the age of the individuals, the sex of the individual. Is it a policy on one life, or is it on two lives? Are the premiums to be paid in one lump sum or over a period of years? I can tell you an example I'm working on currently where I have a male and female. They're about 50 years of age and both in good health. They both graduated from a prestigious university, and they're being asked to make a sizable gift, a gift that they're uncomfortable making out of their current cash flow. So what they're considering doing is purchasing a second-to-die life insurance policy in the amount of $1 million. The premium for that, if it's payable over 10 years, is about 2% of the face amount of the policy a year. So for $1 million policy, it would be $20,000 a year for 10 years. So they would have paid in a total of $200,000, which they would have been able to deduct, and they would leave a $1 million bequest at the end of both of their lives to the charitable organization. We've talked about the two most common methods of using life insurance in charitable giving. There are more sophisticated techniques which require additional planning, probably beyond the scope of our conversation today. The most important things are to work with a tax accountant who understands the intricacies of the tax law regarding both charity and insurance. Also with a life insurance agent who's familiar with how to structure these type of policies to fit the needs of both the donor and the charity. Life insurance is an excellent method to leave a sizable gift to the charity of your choice if structured properly.